All right. Good day, everyone. My name is DF Basy, and welcome to my YouTube channel. Right. So today I'll be showing you how to tell when a trend is about to reverse in forex trading. Right. So this is an issue faced by most traders. They don't know how to identify when the trend is changing or is about to change, or when the trend has already changed, right? So most times they always talk with a bias, fixed bias, which most times ruins their P&L and ruins their chances of being profitable in a week or in a month or in a year. So if you're watching this video, I will help you solve that and show you how to avoid unnecessary losses and how to trade according to the trend and how to know when the trend is about to reverse. So now I'll be using Euro GBP for this chart for this analysis. So this is Euro GBP chart. So that's this is the weekly time frame. Okay. So now if you're conversant with multi-time frame analysis, I think I'm going to drop a video on that multi-time frame analysis. That is top-down analysis. And I have some videos on top-down analysis. So with the top-down analysis, with everything you've seen here, you can see that this guy is very bullish. He's very bullish, right? This guy is very, very bullish. But now, in every bullish structure on the weekly, you can see from all these candles are, representations of what happened every week, every week. So once you have this sell, as market drops it down to here, if you go down to your 4 hours, you see bearish structures. They have this move over here. As market went up, if you go to your 4 hours, you see bullish structures. So without further ado, let's go dive into the 4 hours to basically see the trend well. Because now I use 4 hours to identify and understand structure, market structure, right? Okay, so follow me. Let's go. Now, if you look at this chart, what can you see? I can see that from here, from that point, market has been bullish. From this point, market has been bullish. So what have we been seeing? We have been seeing series of break of structure. To the upside, we have a break of structure. To the upside, second break of structure. So from the second break of structure, it's wise to say that market is what? Bullish. So what will we be expecting? We're expecting buys. We're expecting this buy, taking a buy from here, from that other block, SL below the other block. You'll be targeting the next break of structure or 1:3 like me. So 1:3, you hit TP. So now after this, you still have a break of structure again. The market is bullish. With this, you know that the market is bullish. But then what happened? After the market broke structure again here, you not see another break of structure to the upside. Market didn't break this guy again. And the next thing, you have sales. And mostly people that wanted to buy from here, from this other block, from here, that is a valid other block. What did market do? Market took them out and hit their SL. Market hit their SL. So now, how do you understand and identify at this point? You can look closely. There's a change in trend from a bullish trend here, from being bullish to being bearish over here. So it changed from bullish to bearish on the 4 hours time frame. So what do you see? If you understand your normal market structure, you should understand that you have your higher high, higher low, higher high, higher low, higher high, higher low, higher high. Then if market doesn't create a higher low and it takes out the the higher low that was there, right? So this is the higher low. What you should be expecting is you should be expecting market to either break, continue the break of structure, then you mark this as this was a liquidity, or market calls by respect this block and break structure again. Once you have this, once you have this, you should just know that once you have watch look closely. Once you have series of break of structure to the upside, there's a break of structure to the upside here. Now break of structure to the upside here. And now break of structure to the upside here. Then if you note market was respecting the other blocks, or you call it the demand zones, here and here. Or once market failed to respect this zone and close below it, then went back up, failed to break structure again, but came back down and respected a block here and broke structure to the downside again. So now you have your first, this is your first break of structure. From this from this break of structure here, we call this a change of character. Market took out a low that it wasn't supposed to take out. They have a change of character here. Then once it pulls back and breaks again, you have a break of structure, proper BOS. So once you have a proper BOS there, it has shown and it identifies that market has changed trend. So when this happens over here, at this point here, or let's say take it out from here, you tend to know that there's something about to happen in the market. For market not to respect this other block and not buy from there, there's either, let's say, market took a liquidity sweep, or market is about to change in trend. So now there are two things you wait for. For market, you take a buy, target your 1:3, or you wait for market to see if market will take out this high. And once if market eventually took out that high, should have looking for this, looking for a higher buy to the upside. But in this scenario, market didn't take out this higher high which it kept. It came back to another block, respected it and sold and created a break of structure. So what you should be expecting next is for market to pull back to the next other block, tap the other block and sell and break structure to the downside again. So from here, from here, that is, you have the next break of structure. So from here, from this point, what happened from that point to this point, we can understand that the trend has changed drastically from being a what? From being a bullish trend to now being a what? A bearish trend. So now you start looking for sales. Hope this makes sense. So now let's go to the chart. Now on the chart, so on the chart, like what I just explained for you, you have this series of break of structure to the upside. You have BOS to the upside. You have your BOS to the upside. You have your BOS to the upside. You have a BOS here. What happened over here? What do you see? What can you relate that what happened here? We have the break of structure, market broke structure. What were we expecting next? We're expecting markets to come back and do what? And take out this high, break structure above here. But look, it didn't break structure there. Market didn't take out that high. What happened? Market instead, this was the high. This is the higher low. This is the low that caused the break of structure. This is the swing point that causes break of structure. So what did market do? Market came back down from there and took out this low, which it was supposed to take out, which is supposed to do like this. But it didn't. But market did what? Came back, took out that low, and came back up and retested and broke again. So now, if you look closely, if you can remember the diagram I showed you, markets, there's a what we call a change of character here. Call it a change of character. Can call it a change of character. That's your, or you call it your this not this more like how change the state of delivery is, but change the state of delivery is more intense than more refined. And you can also use it as an entry. Or let's say this you call it market structure shift, MSS. So now what happened here? After you have market break this order block, which wasn't supposed to be, was a very valid order block. Was supposed to be after market break it. What happens? Market retests at where? At a valid breaker block. So what did you retest? You tested here. Look closely. You tested at this breaker block. Or you want to use this other block here. Tested at this other block. And once you tested at that other block, what do? You sold again. Now broke structure again to the downside. So clearly with this, my friend, I will be looking for sales. The problem is with all of this, most people will now still be holding on to the bias of this bullish structure over here. You're saying, oh, it's still bullish, so they will still mark out this other block here and expect price to come and respect it. And what do? They'll keep their buy limits, their buy orders on their MT5 and keep expect markets to trigger and they'll target a 1:3. But if you can see closely, what happened? Markets came to that block and swept their liquidity. You hit SL because of just this simple basic information. It's as simple as this. You hit SL, you take a loss. And that's why most beginner traders are taking series of losses. So with this, I can identify that, oh, this other block that was supposed to be respected has now been swept, right? This other block has now been swept, and you have a market structure shift. With this market structure shift, we observe what is the next move of the market. If the market had done this from here, let's say from here, market came back up, broke structure. What we would have been expecting, since it has still broken structure, we take this as a liquidity grab or liquidity sweep. Then we were expecting this other block to hold price again, to break structure again to the upside, to hold price, to break structure again to this upside, to have another break of structure. But since this didn't happen, what instead happened is you have a break of market, have a market structure shift or your change of character, and market came back, respected an order block here, a sell order block, and sold or break structure again to the downside. So now, with your common sense, what would you be looking for? You'll be looking for sales now. With this, from this place, from this scenario here, from this point here, from this point here, market has changed trend. This point, market has changed trend. So there's a break of structure to the downside. What you'll be looking for now is the next order block to support the next break of structure. And which other block will you mark? If you watch the video, I dropped on order block. You can see that here is a valid order block. You have a bearish and bullish candle. You have your fair value gap inside there. Let me zoom in. You have your bullish candle. You have your fair value gap, which is here. You call it fair value gap, we call it imbalance, whichever name suits you, or you call it inefficiency, whichever, but all those are just names for me. So once market taps that other block, remember, if you check the video, you'll see why another block is valid, how to mark an valid other block. This other block is valid because it has fair value gap, bearish and bullish candle, and block structure to the downside, following the current trend, which it has just changed to being bearish. So if you can see market, if I'm to sell, because now I want to sell because the trend is bearish, right? If I'm to sell, I'll keep my SL above the block. Now, keep my entry at the block, then target a 1:3. Can you see smash TP, and market still broke structure to the downside? Can you see? Still broke structure to the downside. As it broke structure to the downside, there are other blocks you should have respected. Now, this is a block where market should respect this other block. This is another block where market should respect. But now you can check, just look at it. Look at how market came back to that block, tapped it, and sold off. Look at it. Can you see? It's now bearish. Market tapped that block and sold off. So this is it. QSL above. Target 1 is to 3. It's not rocket science, my dear. It's not rocket science. Tap the other block and sold off. And this block now, if you look closely, it's almost mitigated for me, but not totally mitigated. Why? Because market just taps the fair value gap and drop. But this block is still a strong zone. That's why it held price. Can you look at it closely? Now, mitigated other block would have done this. This will happen. Hold on. So tap inside, then you just see the wick. But this one just tapped the fair value gap and then market sold off. But market came back there, respectively, then sold. Now, still in all of this, and still broke structure, you have a break structure to the downside. Now, US. Still in all of this, you still have market is trying to change, right? We're still trying to have a change from bearish to bullish. Now, market is trying to change bullish. So now, what do we have? Now, this is also a block where market respected this block, sold and broke structure, right? This block market respected that other block, sold and broke structure. But what we're expecting, if this is the block that broke structure, you can see now this block here was already mitigated. This is a clean mitigation. This one you have, even if you let me zoom in. This is a very, very clean order block and it's a very, very clean mitigation. So now in this other block, what do we have? Look at this block here. We have the bearish and the bullish candle. Then we have our fair value gap. We have a fair value gap. This is our fair value gap. See it here. This is it. So this is your fair value gap. But what do you see? Markets tapped into the fair value gap, tapped into the block, mitigated it, dropped. So this guy is an invalid order block. And if you can see, market didn't respect it. Market broke above it, broke, went up. So now with this, now you can consider this, you can take this as okay, market didn't respect that guy. Now broke structure now. Now you now have your change of character, you call it your MSS, market structure shift. You have your market structure shift right there. Right? So now what will you be expecting next? What would you be looking for next? Is for markets to come back down, right? And break structure again. So now this is where this comes in. And this demand zone. So market has respected this demand zone. It hasn't broken structure. And it's now pumping, moving. So if we have this surge, this move from here down here, break structure, that you have a full break of structure to the upside. And then what would we be looking for now is buys, looking for buys to the upside, knowing that fully, okay, this guy is now back to be bullish. You have your break of structure here. Mm, There's break of structure here. So with all of this, you need to understand basic concepts of market structure, right? What market structure is, why a block is valid, why you can identify a particular zone as break of structure, why you have your higher highs and your higher lows, why you have your other block at particular zones and all. So everything all boils down with how to identify when a trend is about to change. It boils down with identifying your market structure shift and your first break of structure. Your market structure shift, your first break of structure. So if this was a bearish trend, let me flip this upside down. If this was a bearish trend, you have a break of structure to the upside, then you have market structure shift here, then another break of structure. The next thing we'll be looking for is buys. So this is how you identify when market has changed, the trend has changed, and when it's about to change. So I'll leave you all to study hard, and you study hard, you trade easy. So with this, all you need to do is backtest, study, and try to play out different scenarios on different currency pairs to understand this better. So please, if you're new to my YouTube channel, please kindly click the like and subscribe button, and also share these videos to as many friends as possible. All right. Um, Study hard and trade easy. Remember, keep studying.